The Export-Import Bank of Malaysia, or Exim Bank, which is owned by the Ministry of Finance, is expecting to lend more money by 15% or more than last year, despite the bleak economic outlook. Its CEO, Muhammad Fauzi Rahmat, said that despite the shrinking global trade, which is expected to contract by 20% this year, trading activities will never stop and Malaysian exporters are continuing to explore new markets. He said in the first quarter of 2009, the bank has already given 300 million ringgit worth of loan and is expecting approved loans to surpass 1 billion ringgit this year.
We continue to look for new potentials across the world. Last year we approved about 850 million worth of loans. In the first quarter of this year we have approved about 300 million. So we'll continue to look for opportunities around not only the region, but also across other areas of the world that are not immune, but is more insulated compared to the more developed nations. For example, we are expanding our wings quite fast in the Middle East, certain areas of the Middle East, not all.
Fauzi said the bank this year expects to recoup 40 to 50% of the 850 million ringgit loaned out last year. He added that the bank's non-performing loans or NPL rate stood at 24% in 2007 and would remain high in 2008. He said that the bank would take precautionary steps this year and be more selective when lending to companies.
But we are still very much prudent in terms of lending the money to all these companies that are going out. But at the end of the day, we will know that a lot of Malaysian companies today, they have to go out because the market, the domestic market, is not that growing that fast. So the areas where we are very much into now are the areas of construction, in areas of manufacturing, as well as the direct export from this country to all parts of the world. But as an exposure, we have about 2/3 of our exposure in Asia.
He was speaking to reporters after the signing ceremony between Exim Bank and Asian Finance Bank, or AFB, for a murabahah term financing for 7 years of 55 million ringgit to purchase a building for Exim's new headquarters at the Darul Takaful building. The building, located at Jalan Sultan Ismail, cost 63 billion ringgit. The extra 8 billion ringgit will be paid by Exim. The bank expects to move in its new headquarters within the next 2 years. On another matter, Muhammad Fauzi said Exim is expected to return to the black in the last financial year ending December 2008 without elaborating further as it is still waiting for Bank Negara's clearance.
We are actually going back to the black. How much I cannot tell because it's still waiting for approval. But last year we made a losses of 450 million. 2008 we are making back to the black.
Exim Bank posted after-tax losses of 51.1 billion ringgit for the financial year ending December 31st, 2007. Meanwhile, AFB, which is based in Qatar, is looking at 100 to 200% loans growth this year as many Malaysian companies are exploring opportunities in the Middle East. Its CEO, Datuk Muhammad Azahari Kamil, said the huge growth is because of AFB's small portfolio of 1.3 billion ringgit, as it is still a young bank in Malaysia. The average industry loan growth rate is between 12 to 15%.